Welcome to Iraqi Dinar News, your trusted hub for current updates on global currency trends, potential revaluations, and international economic shifts. In today's update, we're examining newly surfaced commentary from Wells Fargo that has sparked fresh interest in the Iraqi dinar and Vietnamese dong. If you're holding either of these currencies or are considering entering the market, this development might influence your perspective going forward. Wells Fargo, one of the most influential banking institutions in the United States, has reportedly been monitoring recent financial and policy movements in Iraq and Vietnam. Their latest internal observations suggest that both currencies, the dinar and the dong, may be on a trajectory toward notable valuation changes, depending on how key economic factors and political decisions unfold in the months ahead. These insights have reignited discussion within currency investor circles and are drawing close scrutiny from those who track revaluation prospects. For those new to the concept, a revaluation refers to the deliberate increase of a currency's value by a country's central bank, typically triggered by enhanced economic fundamentals, strategic monetary policy, or significant changes in international positioning. Iraq and Vietnam are now seen as countries that could fit this framework thanks to progressive shifts in their financial and political landscapes. The increasing alignment of monetary and fiscal reforms is drawing attention from analysts who monitor emerging market currencies. Let's focus first on Iraq. As of the current date in the USA, the official exchange rate of the Iraqi dinar remains around 1,320 IQD per US dollar. However, momentum is building behind the idea that closer alignment between the official rate and open market rates could lead to a strategic reset. Some observers are even speculating on a possible return to historical levels like 1,166 IQD to the dollar, which was the benchmark during Dr. Shabibi's leadership of the Central Bank of Iraq. Dr. Shabibi introduced a significant monetary reform plan in 2012, often referred to as the Delete the Zeros project. This initiative aimed to simplify the currency system and enhance its value through structural reform. At that time, however, Iraq's economic ambitions were constrained by international sanctions and a lack of internal stability. Fast forward to 2025, and Iraq's fiscal climate looks considerably more favorable. The nation's leadership has transitioned, with Governor Ali Alak now steering the central bank, and there's growing belief that more refined reforms are on the horizon. Iraq's financial system today is showing greater resilience than in past years, largely due to increased foreign investment, a rebound in oil revenues, and stronger regional cooperation. These factors are fueling renewed hope that Iraq may now be positioned to support a more valuable currency. If current patterns of foreign reserve accumulation, policy stability, and macroeconomic management continue, then the foundation for a stronger dinar could solidify. That said, the precise timing of any revaluation remains unpredictable. Across the broader economy, Iraq has witnessed encouraging signs of diversification and institutional strengthening. Several high-profile energy contracts have been signed, infrastructure plans are advancing, and international monetary cooperation has increased. This combination creates a healthier financial ecosystem in which a currency adjustment could eventually take root. Meanwhile, attention is also shifting toward Vietnam. According to the same Wells Fargo commentary, Vietnam's ongoing economic acceleration is equally significant. The country has emerged as a major player in both manufacturing and tech sectors, attracting consistent waves of foreign capital. In recent months, Vietnamese officials have enacted further regulatory changes intended to boost transparency, improve budgetary control, and stabilize trade. The Vietnamese Central Bank, known as the State Bank of Vietnam, recently made subtle yet important changes to how it manages its exchange rate. These shifts reflect growing confidence in the strength of the Vietnamese dong. With foreign reserves now reportedly exceeding $120 billion, 0 cents, Vietnam appears well prepared to protect its currency in the event of global shocks or unexpected capital outflows. This preparedness gives both domestic investors and international observers more confidence in the dong's ability to appreciate over time. Wells Fargo's commentary didn't include a specific timeline or target value for either currency, but the tone clearly reflected heightened awareness within the financial industry. For those holding dinar or dong or considering an entry point, the implication is that the conversation has moved from speculative forums to more mainstream financial discourse. That shift alone is meaningful. This brings us to what this means for everyday currency holders. First and foremost, staying informed is essential. Monitoring announcements from the Central Bank of Iraq and the State Bank of Vietnam can help you stay ahead of potential policy shifts. Whether it's a new economic directive, trade partnership, or foreign policy change, each of these factors plays into how a revaluation might unfold. Second, your investment approach should be balanced. While the potential upside of a revaluation is certainly appealing, it's important to weigh that against the inherent volatility of currency markets. These investments are susceptible to shifts in geopolitical risk, central bank decisions, and global investor sentiment. Those who navigate the space most successfully often do so with clear plans, patience, and guidance from financial professionals. Wells Fargo also underscored the importance of diversification. Rather than concentrating all investments into a single currency or asset, spreading funds across multiple vehicles such as commodities, equities, and real estate can create a cushion against sudden downturns. This isn't just a generic strategy. In the context of emerging market currencies like the IQD and VND, it becomes a crucial part of managing uncertainty. Community engagement can also offer value. Many currency investors benefit from staying active in forums, group chats, or online platforms that focus specifically on these currencies. While not all information shared in such venues is reliable, the diversity of views can provide insights you may not receive from mainstream sources. It also fosters a more grounded understanding of where sentiment stands within the broader investor base. Another smart move is to set predetermined targets. Know in advance at what value or under what conditions you would consider exchanging your holdings. This mental discipline helps avoid the emotional swings that often accompany rumor-driven markets. Without defined goals, investors can easily fall into the trap of holding too long or selling too soon based on incomplete information. At this stage, we begin to see a deeper theme emerging. Iraq's possible revaluation is not just about shifting numbers. It's a reflection of the country's wider journey toward economic modernization and international re-engagement. A stronger dinar could restore public faith, attract more global investment, and re-establish Iraq's financial standing. But any such progress hinges on political discipline, transparency, and consistent execution. Speculation continues to swirl around the idea of Iraq's dinar reaching parity with the US dollar, what some call the elusive 1:10 ratio. While this prospect captures imaginations and headlines, the path to such a conversion is long and requires more than favorable conditions. It demands a sustained buildup of foreign currency reserves, measurable growth in gross domestic product, steady trade surpluses, and, above all, the trust of both domestic citizens and international markets. In this context, enthusiasm alone is not enough. What matters is consistent policy execution and the country's ability to maintain stability over time. Vietnam's case, though different in scale and structure, carries many of the same underlying themes. Currency appreciation here is more likely to happen gradually, mirroring the nation's incremental approach to reforms and openness. Vietnamese officials are less concerned with headline-making leaps in value and more focused on long-term economic durability. Still, the fact that their currency is increasingly stable, supported by a solid reserve cushion and a growing export-driven economy, suggests potential upside is very real, especially in contrast to other emerging markets facing inflationary pressure or capital flight. For investors trying to make sense of this complex picture, timing remains the most elusive factor. Both Iraq and Vietnam have demonstrated improvement, but the final trigger for a revaluation, if it comes, will likely involve multiple layers: political will, international backing, financial infrastructure readiness, and public sentiment. It won't be announced casually, and it will likely be surrounded by careful framing from both governments and financial institutions. That's why patience is often the most underrated trait in the foreign currency space. Those who act impulsively based on rumors, leaks, or unverified claims risk making decisions that don't reflect reality. By contrast, investors who follow credible institutional sources, such as central bank publications, World Bank reports, IMF data, and statements from banks like Wells Fargo, are more likely to navigate this landscape with clarity. It's also worth mentioning how geopolitical developments could influence outcomes. Any changes in U.S. foreign policy, international sanctions regimes, oil production quotas, or regional alliances may impact Iraq's ability to stabilize or strengthen its currency. The same goes for Vietnam, whose trade relationships, particularly with the U.S., China, and EU, play a critical role in shaping long-term confidence in the dong. As the global economy becomes more interconnected, local currencies are increasingly subject to international ripple effects. While many voices in the investor community are focused on exchange rates, there's also an important human dimension to all of this. Currency reform affects everyday lives, from wages and prices to imports and savings. A successful revaluation could lift purchasing power and improve the financial lives of millions in Iraq or Vietnam. But a mismanaged transition could just as easily create uncertainty or social stress. That's why governments must approach any adjustments with transparency and foresight. At the center of this discussion is trust. Trust in leadership, trust in policy, and trust in future direction. Iraq has taken encouraging steps in this regard, moving toward anti-corruption reforms, increasing cooperation with international lenders, and restoring financial credibility through institutions like Rafidane Bank and Rashid Bank, with figures like Governor Ali Al-Lok spearheading initiatives and pushing for modernization. The groundwork is being laid. But the process is still underway, and long-term success will depend on follow-through. Investors also remember key lessons from past transitions. Sudden devaluations or rushed implementations have led to major setbacks in other parts of the world. That's why many experienced analysts urge caution. Even when indicators look favorable, the actual process must be managed slowly, with precision. Any revaluation effort that appears overly ambitious or politically driven could face backlash from markets or global regulators. At the same time, optimism is not misplaced. Wells Fargo's acknowledgement of both the dinar and dong shows that mainstream financial voices are now paying attention. That alone marks a shift in perception. For years, discussions about these currencies remained largely in speculative circles. Now, more institutional weight is being given to the possibilities, though again with heavy caveats about the pace and sequence of developments. Former President Trump's policies during his administration also left an imprint on global currency debates. His emphasis on fair trade, bilateral agreements, and holding countries accountable for currency manipulation brought new scrutiny to global exchange practices. While the direct effect on Iraq and Vietnam was limited, the tone of international dialogue changed, opening space for emerging economies to reassess how they manage their financial systems. Whether future administrations continue that pressure remains to be seen, but the environment has clearly shifted toward more transparency and accountability. From a practical standpoint, investors should make sure their holdings are well documented. That includes securing receipts, verifying purchase records, and staying updated on any changes in exchange procedures. In the event of a sudden announcement, whether a small rate adjustment or a more dramatic policy shift, those who are organized and informed will be in the best position to respond efficiently. No one can say with certainty when or if a re-evaluation will happen, but there is mounting evidence that Iraq and Vietnam are taking tangible steps toward economic strengthening, institutional improvement, and greater global integration. These steps matter. They provide a basis for continued monitoring and measured optimism. As always, stay connected to Iraqi Dinar News for real-time updates and expert commentary. We'll continue to analyze the trends, unpack the signals, and bring you reliable insights as this story unfolds. If you've found today's coverage helpful, don't forget to like this video, share it with others who follow Dinar and Dong News, and leave a comment below. What are your thoughts on where these currencies are headed? Let's keep the conversation going and build a community focused on clarity, not confusion. Thank you for tuning in to Iraqi Dinar News. Until next time, stay informed, stay alert, and stay ready.